to go. A very good evening, dear blockchain students, dear guests, dear guest speaker. We've got a bit of an international cohort today because we've got the guest speaker, of course, connecting from Frankfurt in Germany. We've got also a couple of people connecting from Europe. We also got our students here in Australia, in Melbourne, and some friends joining us also today. It's a great pleasure to welcome in this session Nicolas Weber from Frankfurt. Very, very dynamic person, blockchain enthusiast. That's what his first word in the LinkedIn profile, and I'm tempted to ask him what does that mean, but I'll do that a bit later. But what I'm really interesting in is his title as a head of blockchain development at Amazing Blocks. So blocks and blockchain go very much together. So I'm very tempted to not really bombard him, but maybe fry him with a few questions that I have in relation to the space in general. So Nicolas, thank you so much for joining us on this Friday evening for us and Friday morning for you back in Europe. So maybe I kick off this conversation by sharing with us who you are, what you do, and why blockchain for you, and what is Amazing Blocks.
Okay, so first of all, thanks, Dimitrios. It's a pleasure to be here. Hello to everybody listening. My name is Nicolas. I'm head of business development at Amazing Blocks. And quickly about myself, I joined the blockchain space in mid to late 2016. Like most people, I started with the trading side of it, but then quickly realized that what I'm really interested in is how can we apply blockchain technology to the real world, where it's not about a hype or how prices rise or fall, but more about how we can actually enhance and make current structures more efficient. Hence I kind of started working in the space. I helped a machine producer morph their trade finance system to the Corda blockchain with the Marco Polo platform. I worked on a couple of other projects, and then in early 2020 I joined Amazing Blocks prior to the official foundation. And here, quickly in a nutshell about us, what we do is we leverage the Liechtenstein Token Act. The Liechtenstein Token Act was implemented in January of 2020, has been in the making since 2015. The Liechtenstein Token Act is aimed to allow or to kind of offer a legal framework for the emerging token economy, right? And here, the USP about Liechtenstein is that you can actually tokenize equity. So we're not talking about digital twins. We're not talking about a paper-based shareholder register that is needed. We're actually talking about this one token as the actual share. For instance, in our case, we were the first AG, which is an Aktiengesellschaft in German. It's kind of similar to an LLC, for instance, in the US. And we were the first AG to tokenize equity ever in the world in Liechtenstein. And there, for instance, there's 600 Amazing Blocks equity tokens, which are though registered shares, and they can be verified in Etherscan. And so therefore we are kind of a pioneer and in the same boat as our clients, because what we offer is on the one hand consulting for the establishment of a legal entity in Liechtenstein, because obviously to leverage the Token Act, you need a special purpose vehicle. In most cases, this AG in Liechtenstein, which allows you to kind of set the foundation for it. And here we provide, for instance, templates for a bankless incorporation, which is also possible. So you do not need a bank account anymore to establish your legal entity. We did it, for instance, with Ether as initial capital contribution, but other crypto assets such as Bitcoin or stable coins, for instance, or in the future CBDCs obviously would work as well. And here we provide templates. And on the other hand, we also have a blueprint, streamlining the entire establishment process of the SPV in Liechtenstein. And this is on the one hand what we offer, also some individual consulting in certain cases, but our core product is really our software, where I can also show a demo later on in this lecture. And the software is on the one hand the back end, the token pad, which is basically the management platform, and I can go into detail when I'm showing you this, where we have this digital shareholder register, where we have security features, where we have the minting and therefore the issuing also of the token. And then on the other hand, the front end, which is the investor suite, which is basically for the investors to onboard themselves and then have a nice dashboard in place where they can, invest in the assets, make ownership transfers, find out more information about the assets, like a fact sheet and so on. And therefore it's like basically front and back end. And this kind of, makes this holistic software for the entire, life cycle of a tokenization project. And here we support, with knowledge and software. And that's basically our offering for clients. And also obviously leveraging our network with, for instance, partners such as Nicolas attorneys at law that were involved in drafting the Token Act.
Fascinating for someone who's such a young age, working across the spectrum. I'll just go a bit basic. So what brought you in that space? What was the, let's say, the tipping point of fascination that attracted you in the broader blockchain space, which I want to put it in a framework beyond cryptocurrencies. So I know cryptocurrencies is a big chunk of blockchain, but there is a lot more. So what was the, let's say, the key thing that attracted you or brought you or fascinated you in this space? And you said, okay, I really want to work in this particular environment.
Yeah, when this really happened, when I, really started doing my research, when I joined the space, some people may know it was like 3-4 years ago, it was a bit more hard. It was harder, right, to find information. So it was, everything was fractionalized. You had to kind of dive deeper into the respective topics. And how I really started, becoming an enthusiast, as my bio mentioned, is by listening to podcasts of the founders. And when they talk about their projects, right, where they kind of, explain how they want to morph a centralized system, whether it be in, the financial sector, but also in other sectors, where decentralized institutions and players, kind of have or allow others or do not allow others to join certain, processes, where this decentralization is lacking, which blockchain can provide from a technical perspective, but also from a societal perspective. So that's on the one hand kind of what brought me into the space, this dream of decentralization. Also financial inclusion. I work on a couple of social projects as well in Germany with refugees from the Gambia, and also in Sri Lanka, for instance. And here I realize, it's hard for some people, for instance, to send money back home to their families and so on. And therefore, sure, here we are also again tapping into this field of cryptocurrencies, but generally this peer-to-peer approach, this borderless transfer of whether it be data, information in general, or assets. This is also something that brought me into this space, and really creating a decentralized marketplace where everybody has access to it and everybody can contribute it. A good example here was, for instance, from Dr. Ben Goertzel, who is an AI researcher since, I would say, probably in the 1980s. And he gave an example where, for instance, there's great AI developers in Ethiopia, but they do not have access to, to the AI development processes in the world, because they're controlled by the large big tech companies in Silicon Valley and so on. But they're still very talented. And with, for instance, a blockchain-based application, these guys have access to the market. They can provide their knowledge and their skills, and they can actually get rewarded for it in a fair manner, right? And so that's from this societal aspect. That's really what brought me into the space initially, and then obviously all the other benefits that kind of come along with blockchain followed suit, and also enhancing, which is obviously what we focus on at Amazing Blocks, skipping intermediaries, not having to go to a notary or lawyer for every business transaction or share transfer you do, especially when talking about private equity, and generally making processes much more efficient and peer-to-peer based.
I know that everybody started looking on blockchain because of Satoshi Nakamoto and his paper on peer-to-peer payments in 2008, and of course the first Bitcoin in 2009. But as a technology, and I'm sure potentially everybody knows that it all started in the 90s with Hubbard and Stornetta, and some great papers that they had published on timestamping and cryptography. But Nicolas, something that it's still, I wouldn't use the word bothering me, but makes me more confused, is that even if you check on the news nowadays, 99% of the news related to blockchain are only or solely linked to cryptocurrencies.
Mm-hmm.
So my question to you is, have you seen what would be your summarized reflection on how the space has evolved since Satoshi's breakthrough with the Nakamoto consensus and everything, and how do you see the space having evolved, and where is it actually going?
Mm-hmm. Yeah, that's an interesting point. Like just a little anecdote for myself. Whenever I daily check the news in the blockchain space, I'm always like, damn, Bitcoin here, Bitcoin there, Bitcoin here, right? I know the struggle, and it kind of also, I would say, bothers me to some degree as well, because blockchain is so much more than just a cryptocurrency, right? Cryptocurrencies are just maybe the face that we see from blockchain, but there's, like, I kind of always describe it as a pyramid, right? The Bitcoin and the other currencies are kind of the tip of the iceberg, where really what really matters and what will really have an influence is much below, and will probably evolve in the future. Generally, how the blockchain space evolved, I think initially, especially when Satoshi wrote the paper, and in the early days, it was a more secluded space, I would say. It was really these true enthusiasts that really had shared the vision of Satoshi, that sure that they didn't even care that much about the worth of Bitcoin. They just cared about the kind of the function of it, right? And now what really changes, I think, is really this hype that has been coming, this ideology that has been evolving, where it's about mooning, right? That everybody's referring to, and not about the real value that blockchain inherits. I think the true blockchain developers and enthusiasts, so to say, and they still focus on these core aspects, that how blockchain can enhance the structure. But I really see a lot of new people coming to the space now, which is great on the one hand, and it's exciting, but on the other hand, it's what really is lacking is education in this field. And that's why, for instance, what are you doing is a great job, because we need to educate people to tap into space the right way. Otherwise, they will make mistakes. They will focus solely on trading, and then obviously having losses. I mean, I think everybody that has been trading in the space has been dealing with this high volatility, and it can be exciting, of course, but it can also be, I wouldn't say scary, but obviously it's a danger for especially people that now listen to guys like Elon Musk, and maybe invest their entire holdings and do not even have that much into Bitcoin, and now it's already dropping. I think today it's like minus 12% or so. Like companies joining this space, like that kind of hold Bitcoin now in their treasuries. That may also be exciting on the one hand, but on the other hand also is a risk, right? When, for instance, recently Square and MicroStrategy just bought Bitcoin again, and I think a few hours or even minutes later, Bitcoin had a major drop. And what will this do to the shareholders? So really, what changed, I would say, is initially it was a vision of a better future, and now it's a vision of a better financial future, maybe. So that's what really changed, I would say.
I wasn't going to ask you, but I'm really tempted to ask you about the Elon Musk's move to buy 1.5 billion wealth from Bitcoin. And I've got my thoughts, which I'm not going to share now. But what was your reaction? Are we looking into a more of a centralized accumulation of wealth, or is it more of a hype? Is it more of a cowboy style that Elon Musk is normally portraying?
Yeah, I mean, like, generally, Bitcoin isn't as decentralized as people may think. First of all, because if you look at where the mining power lays, right? I think more than 60% or so are in China. So for it to, like, generally people think Bitcoin is very decentralized, but I mean, there's other coins that may be more decentralized. But generally, I think in terms of Elon Musk, I wasn't too surprised. I mean, he's been dealing with this, or now having like announcements on Twitter a lot, and even especially this whole Dogecoin hype that he kind of initiated, which I also I'm not going to comment too much on it, but I'm not the biggest fan of that, because I think Dogecoin, I mean, I've known Dogecoin since 2017, and like I was always like, okay, there's no value in this, right? And I think it's wrong for people like Elon Musk to kind of push people into this, even though he may have good ambitions potentially to kind of yeah go against these financial institutions that, especially with Wall Street bets hype, kind of show their true face and the need for this decentralized structure. But generally, I think this Bitcoin, there's rumors, for instance, about this Bitcoin buy from Tesla, that it was just a marketing tool basically, because they had some issues, for instance, with the customs, I think, in China, and generally it was more of a marketing stint than really it's like a serious business transaction. I think really what I'm seeing in the industry, where these treasury, Bitcoin as a treasury, is really coming to fruition, is in the private sector, because I've heard a lot about private companies, privately held companies that do this, that have a small portion of their holdings in Bitcoin, and that there I understand it, and there I would support it. But with Elon Musk, I think like if he really was a blockchain enthusiast, to go back to this word again, then he wouldn't just support these hype coins like Bitcoin or Dogecoin, and he would actually support the true projects, and focus more on the decentralization factor and the benefits of blockchain technology and not of cryptocurrency.
So in your views, which are these true projects that really make very solid use cases for blockchain?
There's, for instance, one project, I earlier mentioned Dr. Ben Goertzel and Singularity Net, for instance, which is a project that I've been following for a while, that really got me excited about the blockchain space, where it's about building an AI marketplace on the one hand, and also allowing AI developers from all over the world to contribute, right? So this is, for instance, a project that I really like, because they also have recently established a partnership with Cardano, which is another great project that I like, because they really focus on providing benefits and financial inclusion and identity, which is also recently announced by Cardano to a lot of unbanked people in Africa. Then another great project I like is Ocean Protocol, because Ocean Protocol is focusing on democratizing data. Obviously, data is probably the most valuable good of our time now, has evolved to this stage, and it's still like we do not have control of our data. Even as we're talking here in Zoom, right? It's still like a difficult topic. And their vision is, for instance, to offer on the one hand a data marketplace, and also allow us to be in control of our data by tokenizing it, which then in turn potentially gives you the chance also to morph it into a financial asset if you want to share your data. If you, for instance, go for the Liechtenstein solution. And then there's a couple of other projects. Of course, as everybody, I'm a fan of Ethereum. Ethereum has brought a lot of innovation to the space, and the entire community is very valuable, I think, and it really has helped further foster this emerging space. And generally, I think it's these projects that do not focus generally too much. And by the way, this is not investment advice or so, but that do not focus on marketing their coins, their tokens. It's the projects that actually implement real world solutions that we really want to look for. I'm not the biggest fan of, for instance, these major players like IBM or these private chains, but generally I would say still what these private chains are doing well, like for instance also the Corda blockchain, is that they also solely focus on real world use cases, rather than I would say like this, again, going back to this ICO craze and so on, just making a quick buck. And so I think what you really have to look for in this space, and the true projects, if you do your own research, you really see, okay, does this token, for instance, and I'm sure it's not just about token, but generally, does this token has value, even rather than other than just a means of exchange, right, within the system? Maybe, for instance, a governance function, which is to me, for instance, interesting with these decentralized autonomous organizations. And so these type of projects, I think, are really where that get me excited, and that I think where the core value of blockchain lays, also where there's a great community involved rather than just a couple of key figures. Yeah.
How do you see the evolution of Ethereum on the Ethereum 2.0, especially with the movement towards a proof of stake consensus algorithm? How do you see the evolution there?
We're at Amazing Blocks, for instance, we are following this evolution, closely, because features that are coming, such as rollups and sharding, are really to enhance, the usability of the Ethereum blockchain. And as for instance, so far at Amazing Blocks, we leverage Ethereum for our software. So in our software, there's 5 smart contracts that are triggered. To anybody that's interested, I could even send the GitHub codes of our token standard, or I can drop it in the chat later. But generally, the switch, I mean, it's crucial, right? Because Ethereum has such a large community, so many applications, so many apps built on it, but the congestion is high. Everybody knows it. Like Ethereum as it is now is not, able to scale, and it's not able to disrupt, the entire world, as some may believe, with proof of work as the underlying technology. I mean, like the gas fees are skyrocketing again, especially now with the DeFi hype. I mean, it wasn't just crypto kitties back in the days that really, brought Ethereum to its limit. It's again happening now with DeFi. And I mean, also in the case where we leverage Ethereum, we're eagerly waiting for it, because ETH 2.0 is just needed. And it can also, the staking aspect can morph Ethereum, although what I'm not the biggest fan of is that you need 32 Ether, for instance, to
Really?
to
Okay.
operate the staking node. Yeah, unless you go to a third party, for instance, like an exchange or so, but you need 32 ETH to stake. And if you start staking now, your Ether will be locked for probably 2 years or so at least. So I'm not the biggest fan of this, because obviously who can afford 32 ETH these days? I mean, sure, there's people that can do it, but if you really go back to the core, function of decentralizing, the current structures, then, 32 Ether is not going to decentralize anything. It's just going to give back again, the power to the whales, to the big players in the industry. But generally, I think probably the biggest, happening. So right now, the most important happening, because it's, if Ethereum is not going to succeed with this switch from proof of work to proof of stake, because I mean, proof of work can also be good in certain cases. It can potentially provide more decentralization to some degree. But on the other hand, obviously, I think we all know about the energy consumption factor and other factors such as the scalability and the gas fees are associated with it. But generally, if Ethereum doesn't succeed with this, then one of the biggest players in this industry is obviously going to fail, and that's going to probably or potentially cause another crypto winter. So it's a very important development, and it's going to be crucial for so many players in the industry where that are dependent on the success of the Ethereum blockchain.
You mentioned a couple of times the word scalability, and that's a really, really interesting word for me. And we've discussed with my students, and we're going to discuss this further on throughout the course. So I wanted your views around what could be the key attributes of a scalable blockchain. So what does actually scalability mean in the blockchain language?
Scalability means generally that we can have in more than 3 to 10 transactions per second in easy terms, right? Like, because it's Bitcoin, it's like Bitcoin and Ethereum, all these major chains, that have emerged, they are, very inefficient. And scalability means that we can have, a scalable solution that allows you to have, as much or a sufficient amount of transactions per second to actually allow, real world applications on this. If you're just looking at, the applications or the transactions that are happening, Visa, MasterCard per second, you cannot even compare it at this stage to the blockchain space, right? I mean, it's so much more. So really that factor of that we have a more efficient system is currently at least not given with chains such as Ethereum. And, this lack of being able to scale is obviously causing, or this amount of many transactions that are too much for the network is obviously not allowing us to actually, or that it actually forces the network to congest. And this then in turn causes the network to, or the players in the network to have to pay higher gas fees to actually, trigger their transactions. And then again, I mean, if we just, like we always talk about this factor, peer-to-peer, borderless exchange, and, banking the unbanked, how can you, have a decentralized, global transfer of value if you have to pay $100 just to have a quick transaction, right? So that's where the issue currently in the industry lays. And there's projects such as Celo, for instance, which is a hard fork of Ethereum. That is basically focusing on mobile applications, for instance, that are trying to solve, and they make it more scalable, where you can actually have the scalability by making some adjustments to the Ethereum blockchain, of course, that they forked from. To those that don't know a fork, but I'm sure probably they know as kind of like an update, in easy terms, of a blockchain where two blockchains kind of separate themselves, where the nodes on the one hand switch to another network. And then I think here the scalability, is obviously given with these other chains, but generally it's the biggest buzzword, probably the biggest buzzword in the industry has been for the past years, since everybody's looking at how can we scale this. And because if you really want to onboard, and sure, I think there's right now around 100 million, I just read it the other day, users in the crypto/blockchain space, and that's still not that much, and we're already at the limits, right, of the networks. So if you really want to have we always compare blockchain with the internet, and if you really want to have blockchain as the underlying technology for potentially billions of people, then obviously we need to enhance the current networks and utilize these upgrades such as roll-ups and sharding and so on, and these layer 2 solutions that really can then allow us to really scale to go back to this word, the blockchain applications in the real world.
Do you suspect that the recent Bitcoin halving will end up towards higher transaction fees, or do you also suspect that it will be harder for the Bitcoin network to survive in the future because the incentivization is impacted in any case?
Yeah, that's I think also the issue that I see. Like, I'm the further thing from a Bitcoin maximalist, right? Like I like Bitcoin because Bitcoin is really the gateway to the industry. But the issue I really see is that kind of we are forced to have a certain price, and with every halving, this price even is higher for these miners to be successful. And here I really think that the incentivization aspect will drop, or is already dropping. And sure, right now it's always kind of correlated the gains, or kind of the rise in Bitcoin with this halving. And people also refer obviously to the stock to flow model, but it's really the halving that kind of always triggers these bull runs as well. And therefore, I really see an issue here where what happens if, for instance, miners for a certain period of time will not be able to, efficiently or successfully, mine their currencies and therefore verify the transactions. And that what happens then, when people are scared, when the miners that are really the core fact of this industry and at least in the Bitcoin sector, so to say, then what happens then, right? So I really think that that's a good point that you mentioned, because for me, Bitcoin is more an ideology than, it's a great technology just because it's been running more or less seamlessly since such a long time. I mean, we all know it, which technical device has such a long time that is just running without stopping, right? So the Bitcoin blockchain is, you can say it's a great technology and a great innovation, but I don't really think it's, it was invented for such a large scale of adoption potentially. And it maybe, there's these, side chains, for instance, that may solve this issue, but it will be interesting to see if, for instance, when Ethereum switches to proof of work stake, then who knows, maybe Ethereum kind of actually may take the crown, or another, project where it's just much more, from a technical standpoint, more enhanced, and also much more better utilized for mainstream adoption.
I've got one question from one of our students, Gagandeep. He says, any thoughts on transaction processing infrastructure? If crypto is scaled to regular currency for doing usual day-to-day transactions by people, what would be your thoughts on the processing infrastructure?
the processing infrastructure for these transactions, is a crucial factor to look on. And like here, if crypto is scaled like a regular currency, then we probably need several chains to actually cope with the load of transactions. So what I really see is how this plays out in the future when we really have this mainstream adoption, that there we have several chains that are interoperable with each other, and then kind of having to kind of cope with this volume of transactions. And that's how, for me, the infrastructure will look like, where we have fungibility, for instance, through projects
Mm.
such as Polkadot between the chains, and therefore that will be able to allow us to scale potentially in the future. Yeah.
And also there is a comment from another of our blockchain students, Rimo. He talks about mobile native nodes.
Yeah,
Interesting.
that's interesting, right? That's, for instance, what I mentioned also with Cello, right? Where you have these mobile nodes, for instance, you can have it on your phone or so. And to me, I mean, that's a great invention. It would be interesting to see how this plays out. But if everybody can just, have a passive income, for instance, on their mobile devices, it can really help. Maybe not so much in the Western world, but at least in the, developing world, and the unbanked population, where this provides you with a better, chance to actually build a long-term and sustainable portfolio potentially, and wealth for future generations as well.
Mhm. I'd like to move now to another very key component of the space, which is smart contracts. We've heard a lot about smart contracts. We've been reading quite a lot about smart contracts. So my question to you is, what could be the 1, 2, 3 key elements that still hold smart contracts back? What really hinders adoption and scalability?
For one, what I see is that a lot of the smart contracts that I put out there are not audited, right? So if, like, there's a lot of issues with them, especially in regards to financial transactions. So I mean, we all know it. There was this, or maybe not, but the founder of Yearn Finance, for instance, Andre Cronje, he's a very influential person in the crypto sector, and he just on GitHub put out a couple of smart contracts for a side project of his, and these smart contracts haven't been tested yet. And what happened is the network kind of broke down after a couple of hours. And therefore I think the main issue is that people sometimes just copy smart contracts also from other projects, or don't know what they're getting into. They just push out these unaudited smart contracts that haven't been tested for real world use. So that is, for one, a huge issue that also, for instance, we see in the tokenization space, where it's even more sensitive than, I would say, probably with cryptocurrencies, because here we're talking about financial assets. So therefore, for instance, just a quick insight on us. We work together with Mikobo, which is a provider in this space that is focusing on smart contracts since I would say probably 2015, 2016.
Mm-hmm.
So for instance, from our case, we really wanted to have these audited and safe smart contracts right in place. And another factor that is kind of maybe holding them back is that regulators don't understand the value of smart contracts yet. Smart contracts can be probably one of the greatest tools of our generation, because you can kind of enforce a contract without having to have this third party that kind of oversees it. You can have a peer-to-peer transaction. You do not even have to like each other, right? But you can still have a financial transaction, and that it's going to happen what you kind of put into the smart contract, what you agreed upon. But regulators don't understand it. And I think for instance, this could also be a great tool for votings, and like for governments, for instance, to be utilized. I mean, we see it like again in the tokenization space, or in the finance sector. It's like these general assemblies of companies that can be held on chain in the future, rather than having to go to a physical meeting where you raise your hand, right? Which is obviously not possible right now with the COVID-19 pandemic anyway. But generally, the voting, for instance, can be enhanced majorly also. And therefore I think it would be crucial for also regulators, although I mean, also not the biggest fan of politics and regulators, but to some degree, we need to find common ground with them in the blockchain space, and we need to educate them as well of the possibilities also on the one hand, and also the dangers of smart contracts. So I think that's also what's holding them down. And then maybe from a more, I would say, technical perspective, again, what is holding also smart contracts down from in terms of fostering mainstream adoption is that potentially we need a bit more interoperability. Like obviously blockchain is interoperable to some degree already, but we need more interoperability between the different chains. And for instance, we see it ourselves. We're currently in the process of, we run on Ethereum with our smart contracts, but we also want to offer our solution on Celo, on Cardano, and on other chains. And I cannot give exact details in terms of how much this change is probably going to cost, but it's a lot, right? And we always kind of promote this factor of interoperability, but if you really dive into it, it's so far not that much there yet. I mean, in the future, I'm sure it will come and there will be great innovations made, but that really is, I think, this where you have these different languages and it's hard, and it's a long process on you to more from one chain to another. And therefore also you do not even have to just rewrite the contracts, but you also have to audit them again. And so I think we need to kind of have this a bit more dynamic, interoperability within the chains that is going to have also a big impact on smart contracts, in the future of mainstream adoption for them in real world applications.
And if I may add also, on the one hand, we also need auditors who know how to audit smart contracts. That's the first. And also there's a big challenge between the on-chain and off-chain data and the interoperability with oracles that connect with smart contracts. So I know there is quite a lot of discussion happening on that space too, about the different oracles that can be used to connect and create that interpretation booth between on-chain and off-chain information and data.
Yeah, I mean, oracles is a hot topic currently. I mean, there's good projects such as Dia, for instance, in Switzerland, Chainlink, and so on. But although Chainlink is having kind of sad issues right now that you mentioned, so I think oracles are a great innovation in terms of bridging the gap between the real world and the blockchain space. But the mentioned issues also from the smart contract side are going to be crucial to foster this development to actually have an impact on real world business transfers and applications.
I've got a question from Remo. Would smart contracts open up the tightly regulated environments like insurance, assets, and healthcare, property? And if yes, how?
That's a good question, because from a theoretically they can, right? And you can have these, we see it ourselves, for instance, you could have this peer-to-peer transfer of assets, you could have this peer-to-peer transfer of information through smart contracts, and also you wouldn't even need regulators to step in, because if someone can't deliver, the smart contract will not be executed, right? And therefore, I mean, it can open up this space, but here again, we have to go back to the regulators themselves, whether they want to open up, right? And here, jurisdictions like Liechtenstein did a great job in opening up this space and allowing, to kind of, I wouldn't say deregulate, but as Remo perfectly mentioned, open up this environment. But, if you look at other jurisdictions, for instance, or generally the consensus or the understanding from a regulatory perspective, I'm not sure if regulators actually go into the right direction with this. The projects do, that are working on it, but it will be interesting, because you can have these smart contracts, and we could have then, the risk here I see sometimes is that we have basically two worlds emerging. On the one hand, the regulated space, because regulators do not want to open up to this decentralized world. On the other hand, this decentralized space, and then we kind of have two parallel worlds, of business, basically the blockchain space where everybody has access to and handles their transactions, but are they then again valid from a regulatory side? So that's kind of the risk that I see, and they can open it up, but I think it's too early to say whether they will. We see the right developments in certain cases, like as mentioned, Liechtenstein and also Switzerland is opening up a bit. But for instance, if you look then again at what the EU is, for instance, doing with Mika, then here it's again a bit more difficult to say, because here, if they really do not change too much, blockchain is then to them just an underlying technology, but they do not really let the full potential of blockchain come to fruition potentially, and that's the biggest risk that I see.
Nicolas, before we open the floor for questions from the audience, I'd like to ask you two things. First of all, what are the hot topics in the space now in Europe in relation to blockchain? And secondly, if you would like to share some more information on a high level on the Liechtenstein initiative that you are involved.
Like the hottest topics in Europe, I mean, like would probably, as everybody everywhere right now, is DeFi, generally decentralized finance, because that's just the biggest hype. I mean, I see it, for instance, we have a weekly event on Clubhouse at Amazing Blocks, and I'm sometimes also on Clubhouse connected with people in industry and listening to talks, because I think it's a great chat. And here really, DeFi is taking over the crypto Clubhouse talks, and I think therefore that really shows that right now DeFi is probably the hottest topic, I would say. If we name three in a nutshell, it's DeFi, I think, regulation with initiatives like Mika and progressive laws happening in, for instance, Liechtenstein and Switzerland. And the third aspect would probably be, that's kind of emerging right now, are NFTs. Because how do I realize it? Because as everybody probably in the space, I'm getting approached by people that I've been trying to convince to join the space for a long time, and like now they're like, hey, how is this? How can I get into that? And what I really see, even from people that have been in the space maybe for a couple of months, like what are NFTs? So I think NFTs, non-fungible tokens, are really also a hot trend right now. They're quite interesting, of course. To me, I don't know if a mobile cat or like a digitized cat is worth 600K. But I think generally they can and will be interesting, especially in the future. And for instance, at Amazing Blocks, we're also looking at them. Like, I've already took a note of it, that I will be writing an article about how potentially you could tokenize it, right? Because so far they're obviously non-fungible, but what if, for instance, they actually continue to be that valuable and continue, or kind of really emerge as an art form, that is to be reckoned with, then why not tokenize the ownership, and also kind of more for, and give more people access to it? Because right now it's more of the crypto elite that's dealing with it, rather than really the normal people, right? And what really would be the vision of it. And about Liechtenstein, the initiative, like, do you have any specific aspect that you would like to know more about, or just a general
Just give us a
overview?
very helicopter overview.
Yeah, Liechtenstein generally, I mean, has been, initially, before, it's kind of emerged as a blockchain hub, Liechtenstein didn't have, the best reputation, right? It had been seen as a tax haven, and things like this, but they really wanted to change this. And that's why, even since 2015, first of all, they are a member of the European Economic Area, which they became because they want to comply with EU laws, and they want to allow people that are in Liechtenstein to have this access to the European market. From a technological perspective, the Liechtenstein really has been focusing on blockchain since 2015, where they started working on this regulation. The Liechtenstein Token Act, Liechtenstein Blockchain Act, TVTG. I mean, it has different names, right? But at the end of the day, it's a very innovative law, and the real benefit of it is that, other than in jurisdictions like Switzerland that is also going into the right direction, it's actually an entire new law, right? It's not just adding to existing laws or making some adjustments that open up the stage, right, for blockchain applications, but it's actually an entire new law. And it doesn't even talk too much about blockchain per se. It just defines the underlying technology as a trusted technology, and this trusted technology, which then allows a more neutral approach and a more flexible understanding and utilization of this, how you can leverage blockchain, really gives access, to this market. And here, maybe going back to why Liechtenstein, also from a regulatory standpoint, is interesting, is that that's what our partners at Nicolas told us in a meeting a couple of weeks ago with the client. Like, they kind of told the story where how did Liechtenstein become so attractive from a regulatory standpoint? Why? Because, like, back in the day, actually the regulators looked at all the different laws, especially from a financial side in the world, like in the US, in the UK, in other European jurisdictions, and so on, and kind of took the best, laws from each jurisdiction and pulled them together into their respective law. And I think that's kind of why Liechtenstein is also a financial hub on the one hand, because it has these business-friendly laws and helps businesses evolve and scale. And then on the other hand, it's emerging as a blockchain hub in general, because there's a lot of interesting blockchain projects that for instance set their foundation there, that have a seat there. They have the House of Blockchain there, where a lot of interesting players in the sector are located. I mean, everybody probably knows Bittrex that is located there. There's also a DEX for digital assets that is emerging there called Fountain that is quite interesting. It has the kind of like a portion of the MakerDAO community behind it. So it's a really heterogeneous, I think, community there. On the one hand, these true blockchain enthusiasts, the projects that have set foot there, but on the other hand, also people from traditional sectors that want to build together with these people. So it's really a lot of different players coming together with innovative lawyers, with innovative custodians. Even banks are located there that are offering custody services for tokenized securities, for instance. And Jenny, maybe to wrap this up, the true benefit of Liechtenstein is because they define blockchain as a trusted and therefore neutral technology, basically, is that you can passport these tokenized securities as a normal security, on the one hand to the EU, but also to other jurisdictions. So we're not talking about cryptographic tokens here, we're just talking about normal securities. And that's how we also define it, for instance, in our software. We don't call it like issue tokens, we just call it issue shares, because that's what it is at the end of the day.
I've got a question from Gagandeep. Are European regulators planning something like GDPR for blockchain crypto?
That's interesting. I think it's going into this direction, potentially, but it will be interesting how this plays out and see, because European regulators at the end of the day are generally very hesitant, and they try to overregulate things as well. So, like, I cannot give a definite answer on this regard, but I think it could be in the next years that we see something like this coming in.
Mm-hmm. We've got about 10 minutes before we reach this session to an end. So if there are any questions from our audience, feel free to either write them on the chat or feel free to jump in live. I've got one more question from Gagandeep. I've read some articles about this, specifically regulating app exchanges for buying or selling crypto.
Mm-hmm. Okay, like
I think probably he means about regulation of the crypto exchanges.
Mm-hmm. Yeah, crypto exchanges generally, I mean, in Europe, they're, from a regulatory standpoint, they have very strict laws for them, especially when talking about KYC AML aspects, right? So in Liechtenstein, for instance, which many jurisdictions actually in the world are looking for, there's 4 levels of KYC and AML, for instance, depending on how much you invest. So it's very strict when we're talking about retail investors. And that's really, in Europe, the case where private investments are a bit more open. For instance, in Liechtenstein, also from an exchange standpoint, generally, although mostly private listed coins or so are not going to be on exchanges like us at Amazing Blocks. We are also not on exchanges, our tokens, so as they're privately held so far. But generally, Europe is in terms of exchanges, especially with MiCA, they have a lot of strict laws there that could potentially come to fruition. Like for instance, especially when looking also at stable coins and the issuance of them and so on, and you need an entity in the jurisdiction and these type of aspects that are happening are going to be interesting to look at how this will potentially also harm innovation and also these strict laws. But on the other hand, you know like the exchanges have done a lot of I would say bad things per se as well in terms of market regulations. Also it's because exchanges are not like, especially when talking about, not we're not talking about dexes, but really like exchanges such as Binance, Coinbase, Bittrex and so on. They're also centralized players, right? I often compare them to kind of a soft bank, right? Although that's also a company, but like it's kind of like a bank, right? Or it's this third party, this intermediary that provides these market making mechanisms, that provides liquidity, but on the other hand, it's really against the core value. And therefore I think to some degree it's important that we also regulate them, especially for instance also these major players in the industry that have been involved in these pump and dump schemes as well. In terms of app exchanges, I think app exchanges are a great use case for instance the unbanked population, right? Where really you have these mobile apps and therefore you do not need access to computer or so on to kind of utilize them. So therefore I think their probably regulation is not so much so much tightened potentially per se in some jurisdictions, or should not, at least should not be too much tightened, because we really want that peer-to-peer exchange through them to come to fruition. But Jenny, I think Europe is always kind of known for over regulating things, and I don't think that this will really change in the future.
Now, do we have any questions from the audience? Feel free to jump in or put it on the chat. Okay, so maybe I'll just ask. Oh yeah, I've got one. Have you ever had someone use blockchain for a business case which you thought is a bad example of a use of it?
At Amazing Blocks, not so far, thankfully. I mean, we've had requests from companies that are in sectors where I personally would not support it. I cannot share details here though, because there have been NDA signed, where where it's like just sectors that are not to be kind of forced into this. But generally I think bad examples are misusing the transparency that blockchain generally provides, right? Because for instance, and I have to be a bit careful here though, but for instance, like on the one hand, CBDCs for instance can provide a lot of benefits, but on the other hand it can also provide a lot of power to the governments or the central banks that are issuing it. And also, or maybe now when I'm saying it, a bad example to me, now I'm not offending anybody, is here is Libra/Diem, or however you want to call it now, when these big tech companies kind of tap into this space and that already have so much data on it. And with these coins they wouldn't even have not only the data that we use on social networks, but also our financial data basically through these applications. And I think misusing this transparency, which can be a great benefit of blockchain but also a great risk, I think is one of the worst examples I would see for blockchain applications, because with every great innovation there also come great risks, right? And therefore it's just going to be interesting or crucial or important to see whether the good players in the industry that succeed, or the bad players, or these centralized players that kind of misuse this technology.
Gagandeep is asking, any thoughts on the idea of dollar on blockchain? I guess he's referring to the central bank digital currencies and the e-dollar, e-euro, e-krona. So any quick comment on that?
Yeah, I mean, The dollar on blockchain, I mean, there's talks in the industry, and I've talked to Douglas from INX, for instance, about it a couple of weeks ago, that potentially, for instance, the dollar may not even be issued by for instance, the Fed or so in the US,
Hmm.
but actually coming from the private sector. So the dollar may be one of these currencies that actually will not come, from the central bank side, though. I do think that the dollar on the blockchain is crucial and helpful, because especially when looking at stablecoins such as USDT, which has a lot of, I would say rumors around it. So maybe it's not the best example here, but USDC, for instance, is a more bad example potentially, that provides, other than Bitcoin, that is usually the gateway to the space. These, stable coins can be the gateway to the space, and
Hmm.
can provide a lot of liquidity also, not only to cryptocurrencies, but generally also to tokenized securities and so on, because now we can have actually these fiat currencies on it. I don't think that, we're really going to see this battle between fiat and crypto forever. I think both will kind of coexist, but and this can kind of bridge, these stable coins or CBDCs can bridge the gap if used correctly. And though on the other hand, USDC, for instance, maybe some people don't know, this is also a project that is kind of also around Goldman Sachs. So it's also not a major bank involved in this space. So with everything, there's two sides of the story, I would say.
Yeah. Um, Being conscious of time, one last question from me, Nicolas, so we can also wrap up our very, very illuminating and fascinating conversation, is because we are in the space of education, so we're trying to educate people and upskill and skill people around blockchain. Based on your experience and your journey so far, what could be a recommended or, well, suggested pathway for someone who wants to be either part of the space or, leverage from a career point of view and capitalize on all these developments? What could be some skills? What could be some ways to look in the space? Is it networking? Is it, what could be your ideas?
Mm-hmm. Like on the one hand, I would say learning by doing, right? Because while it's much better in terms of how you can, educate yourself in the space, it's still, very messy, the
Yes.
information, and it's
Oh,
still
yes.
very overload of information. So there's so many applications, because blockchain can and probably will disrupt so many different sectors. So there's so many different points, and so many different chains. And so the best thing is, and also that I experienced, is learning by doing. On the one hand, the best example, just try something, just try maybe potentially, get as a first step, try, although crypto obviously is not the entire space, but maybe try as a first entry point to kind of deal with these, potentially even with not with an exchange, but actually with a non-custodial wallet such as
Mm,
MetaMask. How you can leverage this. Maybe try around the Ringby or Robson test network of Ethereum a bit, and trigger these smart contracts. But generally, in terms of how, from a career standpoint, what I can only suggest is reach out to the people, join the communities, because in the blockchain space, and that's something that also, surprised me when I first entered, people are very open to it, right? Like even the big dogs, so to say, in the industry, they're accessible, right? If you approach them the right way, if you don't, not obviously not like when moon or something like this, but if you approach them in the right way, then they will be most likely to reply to you. Or if, and generally, if you step by step work your way through the communities, they're maybe helpful in terms of, any questions you may have. Join the Discord channels, Telegram channels, and just approach the people, and provide your knowledge. Ask, hey, how can I help? And that's, for instance, how I also kind of started in this industry, just poking around. And I think that it can be, at times frustrating, and it can be, a mess at times, because obviously there's so much information and so many people in these communities. But on the other hand, it can be very exciting, because people in this industry are very welcoming. And if they're not, then they do not, carry the core values of blockchain. So I would say just get involved and try, and everybody is obviously welcome also to reach out to me, and I can also make some introductions as well to players in the industry if someone is interested, and just look for the projects that kind of align also with your own values and with your own interests per se, because there's so many projects. And if you, for instance, interested in I would say, financial services, then look for a project that is focusing on that. If you're, for instance, interested in data, then look on for projects like Ocean Protocol and so on, right? So it's like just there's space for everybody in the industry, and that's what we also see. We see other tokenization platforms not as competitors, but actually as a part of our community, and we work together with them. And like, for instance, with Stobucks in US or so. So therefore, I think it's just try and get involved, and just don't be shy or hesitant, right? Just get involved and ask and educate yourself with podcasts, with articles and so on.
Excellent.
And obviously join lectures of you, Dimitrios.
Well, Nicolas, I'd like to cordially thank you very much for joining us on this very, very, very insightful and very engaging discussion. Thank you for your insights, and I'm looking forward to keep on working with you and starting to work on a few projects together. I'll get back to your email soon. And also, I'm looking forward to having a Weiss beer with you in Frankfurt or somewhere in the world when COVID allows. I trust that I am following your steps very closely, and I'm very proud of what you're doing and the enthusiasm, the engagement, but also the professionalism that you're bringing in the space. I have shared your details with the students, so if anyone is interested, he or she will contact you. And very much looking forward to staying in touch and bringing you back again, and hopefully physically in the near future here in Melbourne.
Yeah, I mean, also thanks to everybody that's been listening. Thanks to you, Dimitrios. It's been a pleasure. I always see that based on your questions and based on the question of the students and so on, and everybody that joined, I see that you guys really are into the blockchain space, not just from maybe the tip of the iceberg perspective, but you really dive into the space. So really appreciate it. Always welcome in Frankfurt for a Weiss beer, but I would obviously be more excited to go to Melbourne. I like the warm weather, so to me, like
we'll try to make it happen. We'll find a way, for sure.
Definitely. Looking forward to it.
All
have
the
a
best.
Great day, everybody.
Thank you. Have a good night. Have a great day for you. Have a lovely weekend, everybody. And looking forward to welcome you in the future in one of our next webinars. And Nicolas, I'll follow up with you on a separate conversation. Take care. Have a great night and all the best. Bye-bye.